Good morning, I'm Donnie DeLange and I'm going to highlight some main points of Investec's year-end results. The share seems to offer value, trading at a discount to its peers on an earnings multiple and price net asset value basis. We remain concerned about the group's subpar return on equity. Despite relative buoyant markets over the last few years, we would kindly recommend investors to stay neutral. We value the banking business on a price net asset value basis while applying a market-related earnings multiple to the wealth and asset management businesses. The traction in its client franchises and ongoing enhancements to the group's digital propositions should continue to support its momentum going forward. The local operations are likely to benefit from more supportive macro conditions, while the impact of Brexit on the UK operation is still uncertain. Their continued focus to increase the contribution of capital-light businesses and reducing costs, notwithstanding the ongoing investment into growth initiatives, are supportive of a higher ROE in the medium term. Annuity income is high at 76%, but market movements have a significant influence on the group's performance through its asset-based management fees. This, together with forex volatility, increases the group's forecasting risk. The share price is underpinned by an attractive historic dividend yield of 4.3%. Looking at some financial highlights, one thing to note is that results are reported on an ongoing basis. Looking at some financial highlights, one thing to note is that the results are reported on an ongoing basis, which excludes the disposed Australian and Kensington businesses, as well as the group's legacy portfolio in the UK, which is currently being run down. Investec reported satisfactory results for the year ending March 2018, despite the volatile environment. Currency movements positively influenced the results by 6.6%. Core loans and advances rose by 11.6%, and net interest income increased by 11.7%, supported by strong lending activities and a reduction of lending costs in the UK. Impairments on loans and advances rose to 11.9%. However, the group's credit loss ratio declined to 0.26%, which is at the lower end of the group's long-term average. Net fee and commission income rose by 7%, driven by growth in assets under management and a robust performance by South African banking division. Growth in assets under management was driven by improved net inflows, favorable market movements, and the forex effect. Then third-party assets under management rose by 6.5%, which is up 6.2% on a constant currency basis. Investment income declined by 4.4%, mainly due to the underperformance of the South African unlisted investment portfolio and certain listed portfolios of the group. Trading income reduced by 12.5%, impacted by the high base in the previous year due to volatility surrounding Brexit and losses incurred in South Africa on Steinhoff. Then the total operating costs increased by 8%, driven by continued investments into digital and IT initiatives. Higher headcount costs focus on facilitating growth and specifically the expansion of the UK private offering. Then the cost-to-income ratio rose to 66.5%. The adjusted earnings attributed to ordinary shareholders rose by 16.2%, while the adjusted earnings per share rose by 13.3%, impacted by a 2.5% increase in the weighted average number of shares. Then the net asset value was 5% higher, and management approved a gross interim dividend of 13.5 pence, which is 4% ahead of the comparable period. For South African shareholders, this equates to 232 cents per share. Now, lastly, looking at the portfolio guidance, Investec has a current capped SWIX weighting of 0.6%, and we would recommend an exposure of 2.17%. Now, before I end off, if you wish to place a trade, please contact the trading desk. Investors are reminded that they can refer to the research tab on the PSG Wealth Trading platform to view the more in-depth company analysis. And please look out for our next trade idea on the group, which should follow the release of its half-year results towards the month of October. Investors can also refer to the filter tab under the research section of the PSG Wealth Trading platform for a live relative valuation on the group in the interim. And also please note the following disclaimer. Thank you very much and enjoy the rest of your day.